Hi everyone, welcome to another weekly Forex forecast for the week ending August 7th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the EURUSD, the Pound USD, the Dollar Yen, as well as gold or XAUUSD. We're going to wrap things up with VeChain or VETUSD, because in my opinion, that one is getting ready to move. If you remember from June, when it broke out last time, it ran for 150%. And I think this latest breakout could take the pair 60% higher, and I'll show you why. All right, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. Alright, so first up we have the EURUSD, and the big story last week was the July close beyond that multi-year wedge pattern. So this is something I've been talking about now for months, where we were waiting to see whether the EURUSD would close the month either above this resistance or below support. And as you can see, we did get a July close above that resistance area right around 116.50. Now you could make a case that this upper level should be drawn from this top back here to include this high right through here. All right, so notice how this high back in this area, if we draw it from the very top of that, the EURUSD didn't break that level. However, I prefer this placement right here because we captured this high through this area, which I think was significant. So we have this all-time high back here, we have this swing high, and we have this swing high here. So if we use that, the EURUSD did clear the 116.50 area on a monthly closing basis. And that, in my opinion, could take the EURUSD higher as long as it holds above that area on a daily and weekly closing basis. So if we take a look at things on the daily time frame, this is the bull flag pattern that I've talked about several times now. And I was also buying the pair when it broke out on this candle. So I was buying through this area. I announced it to members, and I still hold that long position from 112.99. So we had this rally back here. We had the consolidation into this bull flag, the breakout, and ever since then, the euro has been on a tear. Now, short term, I'm looking at 117.70. That's going to be the support area that has to hold this week. If we see the EURUSD close below 117.70, look for a pullback into the 116 to 116.50 area. All right, so that's going to be a key horizontal level and also the top of that multi-year wedge pattern we just looked at. Alternatively, 119 is resistance. So if we see the euro close above that area, look for a push up into 120.90. However, if this multi-year wedge pattern does hold, so this 116 area holds, we could, in my opinion, see a push up into 125. So that's this swing high back here. And the reason I think we could see a breakout of that magnitude is simply because this is a massive wedge pattern. So if this breakout does hold, I don't expect this to be a 100 or 200 pip move. I do think that we could see a significant push up into 125, perhaps even higher. But there are no guarantees, and buyers have a lot of work to do to keep the pair above that area. Next up, we have the pound against the US dollar, and this one played out nicely as well last week, where we had this close above the 128.15 level. So 128.15 was the level I talked about last weekend that had to break on a daily closing basis. Notice how Monday did that, and by Wednesday, we had that retest of 130. So 130 was the target following the breakout above 128.15. I talked about all this last week. Now, going forward, we do have a long-term trend line that extends from this high back here in 2018. All right, so this trend line right here, you can see where the pound touched off of that level last week, right around 131.60. So notice too how Friday carved a bearish pin bar. All right, so this bearish pin bar does hint at weakness and a rotation lower this week. So as long as we see 131.60 hold as resistance on a daily closing basis, expect some weakness here from the pound. We could see a pullback all the way into 128.15 or something shallower toward the 129.60 area. All right, so this low right through here. So if we look at the daily time frame and zoom out a little bit, you can see where this 129.60 to 129.70 area served as a pivot back here. All right, so if I draw the level on the chart, you can see where this area last year served as resistance through here. It then closed above it, and that area started to serve as support. All right, so 129.60 to 129.70 is going to be support in the near term. And if we do see the pound close below that area, look for a deeper pullback into the 128 area. Alternatively, of course, if we see the pound push higher and close above 131.60, that area becomes support, and we could even see a push as high as 135, which of course is the high back here in December. Just like the EURUSD, the dollar yen closed below a big level on the monthly time frame. So this is a multi-year wedge pattern that I've been talking about now for months, just like the euro pattern. And we've been waiting for a monthly close here because if you look at the daily and weekly time frames, the pair has not been respecting this wedge pattern on a daily or weekly closing basis. That means that we were waiting for a monthly close beyond this structure in order to either buy the pair or sell it. And as you can see, July closed around 105.85. So 106 was the level that had to hold that support on a monthly closing basis. And with the dollar yen below that area, we could see a reaction at 106 in the coming week. So the only thing I'll say about this is that it's a marginal break. So I would have preferred to see a close down here at 105.50 or perhaps lower to really indicate that 106 did break. But as always, it's all going to come down to watching the price action this week around 106. If we do see sellers come out and defend that area, look for a push down into 101 over the coming weeks. Alternatively, if we see the dollar yen recover back above 106 on a daily and especially weekly closing basis, it would indicate that this breakdown was too marginal and that this bottom portion of the wedge is still serving as support. So it's all going to come down to the coming week and what happens around the 106 handle. Gold has been on an absolute tear recently, and we can see that with XAUUSD. So we were talking about the consolidation back here for several weeks, and we did in fact get a breakout through this area, and we even got a bullish pin bar, which I talked about several weeks ago. We were also talking about it before all of this. In fact, I mentioned it first in the members area when the pair was breaking out down here around the 1600 area. And I was actually buying gold miners ever since this region, and those positions are now up well over 100%. Now, one thing I mentioned last weekend was that the 1900 area, which is the previous all-time high for XAUUSD, was likely to attract sellers. However, this bull market is so incredibly strong that we didn't see much reaction there, and instead gold blew right through that level. So going forward, 2000 is probably going to be the next key resistance area. And I say probably because XAUUSD has never seen these prices. So from here, it really becomes a matter of just picking round levels like 2000 because we have nothing else to go off of. So going forward, really 2000 and 2100 are going to be two areas I keep an eye on. But I also think that the $1,900 area could serve as support going forward. Remember, that's the previous all-time high. And if we look at the monthly time frame, you can see clearly how this area between $1,900 and perhaps $1,915 could start to serve as support going forward. And this is a clear breakout. So we've had a monthly close now above that previous all-time high, right around $1,900. So again, from here, it's a matter of moving toward the 2000 handle with a close above that, taking on $2,100 and probably $2,200 from there. So that's all contingent on that $1,900 area holding as support. Obviously, if we see that give out, it could indicate that this was a false break and could send gold lower. But right now, given the technicals and even the fundamentals, I see gold going much, much higher over the coming years. And I plan to stay long those gold miners for the next couple of years. So VeChain, ticker VET, is a cryptocurrency I've talked about a few times in the last few weeks. And the last time I talked about it, the pair was coiling inside of this wedge pattern. And we got a breakout here back in early July that took VeChain on a 150% rally. Now, ever since this time, we've had a lot of volatility, a lot of selling, which is to be expected after a 150% move. However, we also have a few different patterns happening here, one of which I talked about yesterday on the blog. So on Friday, I talked about VeChain. If you saw that post, you know that I was looking at a bull flag pattern here that could take the pair up to 0.028. And I still think that that's the case. But today I wanted to take a little bit of a different view and show another wedge pattern, a potential wedge pattern that's forming here after this run up. So notice how this bottom portion is well defined. And then we also have this top level that is serving as resistance. And this matches what I've been saying about 0.0175. So the 0.0175 area is the one that has to break at least on a daily closing basis in order for VeChain to really break free from this consolidation and move higher to retest the 2-cent mark. So 2 cents is also going to be a critical level. If I draw this on here and look at the daily time frame, you'll see why. So even though we did get a little bit of a break back here, if I move to the daily time frame, notice what happens. We have yet to have a daily close above 2 cents. All right, so the 2 penny mark is going to be critical moving forward. So right now, 0.0175, we need a daily close above that to confirm this breakout and set VeChain up to the 2 cent mark with a daily close above that, taking on 0.028. And 0.028 is actually the all-time high for VET. VEN was trading above that level in previous years, but under the VET economic structure, 0.028 is the all-time high. Last but not least, I do want to point out that VeChain is a long-term investment for me. I'm holding this one over the next few years, so I am not trading this one at all. I think that 2 cents, 3 cents, etc., this is all just a warm-up for much higher prices over the next few years. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.